Hey traders, welcome back to my channel. Today's video is much requested and it's simply the three indicators that I use the most. So I'm going to briefly discuss them. However, it might be a little bit repetitive. If you've watched a lot of my videos, you might have actually seen me using them. So I'll keep it pretty short and sweet. And if you search through my channel, you can find a video on pretty much anything that's more in depth. So if I kind of skip over certain things, you can always go back or request a video in the comment section. I do try to link important videos within each description. So if I think there's something relevant that I want you to see, I'll link it below and you can check that out. But I try to keep my videos like pretty short and to the point, just so you're not having to sit here all day and listen to me ramble on. So that being said, we'll get right into it. So the first indicator that I use is the EMA. Never really used these a whole lot before, but I've been incorporating them now that I kind of trend trade a little bit more, as my style has been evolving over the years. So I do love the 200 EMA. That's my favorite. And I use this one on the daily. So I'll use this EMA on the daily time frame to give me my overall trend direction. So I'll briefly put it and say, okay, if price has consistently been below this line, sorry, I know I have blue zones and a blue line. We'll delete these and I'll go back into them later. Because the thing is, guys, I always trade zone to zone. So I don't ever use an indicator to enter a trade. That's not what I'm getting at. Indicators are just tools that can help you have extra confluence in your trading and, act as extra confirmations. So for me, there's no way you can have too much confirmation that a trade is good, right? Unless you're sitting there all day and, that's more psychology if you can't enter a trade, but I'm rambling again. So, I'm looking for price to say below this line if I'm looking for sells. And then if it's consistently above, I'm looking for buys. So it's not so much about entry. However, catching a break of that can be a really, really great entry because there's such a high risk reward. It's more to guide me when I'm looking at overall direction on the higher time frames. Okay. If I am actually entering a position and I'm saying, okay, I've plotted, my zones. Let's do an example actually really, really quick. So I have a zone here, right? So I'm saying, okay, I'm above the 200 EMA. I'm looking for buys. I have my structure. This is a really quick version of what I would do. Let's go down to the 4 hour. That's where I like to enter. I'll now plot the 50 EMA. Okay. So we can plot the 50. This can be used to day trade as well. I have a post about that, a video about that. I can link that for you. And the 50 EMA just follows price a little bit more close. If there's like this little gap, see that gap that's happening all along here? That gap's telling me that we have a nice strong trend, because in a weaker trend or even let's say like a normal market condition, it's just going to be right below. You're not going to see a wide price or a wide space between price and the line. So that's a little tip for you. But really what I'd be looking for here is that price is above that line, that space in between, and you can actually look to get in again at a retest. So had this happened, if there was a retest of this line or a break of this line at this zone, that would give me added confirmation. So added confluence. Now there's not, which is, you can't make things happen. But, if let's say we entered, I should have left my other zones in because I had other zones in here, but that's fine. Let's say we had, our zone here. And I know there is one lower as well. But let's say this zone here, price came back, it retested. You could get in here at the retest of that 50. So this 50 can actually act as what's called a dynamic support and resistance line. So it's a support that's moving with price. And then in a downtrend, of course, it's going to be a resistance that's moving with price. So I'll try not to kind of overflood you with information, but hopefully that made some sense to you. So those are the two most common EMAs that I use day to day. And that's how I use them to guide my entry and give me added confirmation. So let's delete those guys and let's get into the MACD. So you probably heard me talk about the MACD as well. I absolutely love the MACD because a lot of my trading relies on momentum. And that's what the MACD is indicating to us. It's indicating how strong our trend is and how much momentum we have coming out of a certain area. So if I were to enter a trade, really the histogram down here is the biggest kind of area that I look at. Okay. So when I'm entering a trade, let's say, we get a breakout here. When I go down to my histogram and see these long bars, that's indicating to me that I have a strong enough momentum to enter the trade. If we look over here, right, let's say you had, let's get rid of this zone, and say we had like a trend or a resistance here, trying to include as many wicks as possible. And you tried to enter at the break or the retest of one of these zones, you would say, so let's say you were trying to get a retest here. Obviously it broke through, but let's say you were looking for a retest. We could say, you know what? We don't have much momentum there. It's no good. You'd be looking for really strong momentum, long bars like these, okay? So that's the first way, very, very easy. Don't ever enter a trade based solely on that, but it just helps me to say, okay, we've got that momentum I'm looking for. Let's get into this trade. The other thing we can look at are these two essentially moving averages, but I hate calling them that because they're not calculated like normal moving averages. And I'm not going to get into how they're calculated because it's honestly very confusing and I'm just going to confuse you. But basically that's what these are. They're a type of moving average that are calculated differently. And as they space apart or crossover, it can give you good entry points. So if I have really strong momentum plus a crossover here, that's a really good indication to me that we could have a trend change. And then, of course, our strong momentum afterwards. So those are the two things I look at, but it's really just a way for me to gauge momentum. Nothing confusing. And actually, sorry, the most important part, and I shouldn't have said that, I'm almost done because I'm not really, is divergence. So I like to use what's called hidden divergence. And it is a more advanced technique. So I don't want to confuse any beginners. So just know that if you're a beginner and you don't understand this, that's okay. There are tons of videos on this on my channel, on other great channels. So don't worry too much about that. But hidden divergence is essentially, when we break it down, it's just when price and your indicator are telling you different things. Okay. And hidden divergence specifically, so there's regular divergence and regular divergence. I'll start writing this down in case you want to jot it down. Regular divergence indicates a reversal is coming. Okay. And hidden divergence indicates that we have a continuation, which is my favorite way to trade divergence because you're not opposing the trend. And I don't like to oppose the trend. Okay. I'm trying to trade with the trend. I'm a trend trader. So with hidden divergence, what I would be looking for is when price is making, let's say, higher lows. Okay. So higher lows here. I'd be looking for the MACD at that same point, and I think we actually have it here, funny enough. Maybe not. I'd be looking for the MACD to make lower lows, so doing the opposite. And I'd be looking right here at the histogram. So I'd want to say, okay, at the exact same point, I would want price to be making lower lows, which it's not. It's going up, which is in correlation with what's happening, but that's what I'd be looking for. I don't have an example right here, right off the bat. Obviously not, because I'm just looking at a random area on the chart, but that's what I'd be looking for. Like if the histogram was coming right down here, that's really messy. Hold on. Okay, let's say the histogram here, because this is where we're looking at, right? So we're looking at this area. So you have to go down right to that area. So you can use your crosshair and go right down there. So this area here, I'd want it to actually look like this. Or that's what, not that I want it to, but that's what I'd be looking for with divergence. So if price is making lower lows here, telling me the exact opposite thing, then I know that we have likely a nice, strong continuation happening. And I'm just going to go ahead and link my divergence video below, because if you're a beginner, that might be confusing you. But divergence is the other way I use, or the other way I incorporate the MACD. And last, now, some people might hate me for saying this because I am going to talk about fibs, and most people, or a lot of people, I shouldn't say most people do consider it an indicator. Some people don't. It's a tool, whatever you want to call it. I don't really care. I'm really not here to argue about what it's classified as, but this is definitely like I absolutely love using fibs, but more so when I day traded, because it'll give you really good pullback opportunities. So I'll show you exactly what I mean. Oops. I keep mine all black now. I used to have all the colors, but I just don't really do that anymore. I find the black so much more sharp and kind of easy to see, and I only work with one level anyway. So the way I use fibs, so I'm on the 4-hour chart. I'm going to zoom you in. Very, very simple. In an uptrend, I am looking for buys. Okay. If I'm day trading and I'm looking to get in at the pullback, Fibonacci confirms where that pullback might end. Okay. So for different pairs, you do tend to look at different levels. We're on EU. So if I were to go from, and this is how you plot your fib, so pay close attention to this. You go from the recent swing low to the recent swing high. I know I'm going to have a lot of linked videos in this one, but I'll link my fib video on this too if you need more explanation on how to plot that. But essentially, this is how you draw it in. So from your swing low to your swing high in an uptrend. Exact opposite in a downtrend. And we'll do an example of that as well. So where I'm looking to usually get in is the 50 level. Okay. So between the 50 and 60. Now, like I said, it does kind of change with different pairs. So some pairs you won't, like the Euro USD, for example, does tend to respect the 38.2 as well, which is why we had a nice continuation there. It didn't come down to where I would be looking to get in, and that's totally fine. Let me see if I can get another example, but that is how you plot it, and that's how I use it. So I would not have entered there based on the Fibonacci zone. Here's another one. So your low to your high, and then price just came down way too far here, so that wouldn't have worked out. Hopefully I'll get an example where it does work, but let's go to a pair, because like I said, some pairs are much better for this. USD CAD and gold would be my favorite, and let's do a down. Let's do it in a downtrend. So it's just the opposite. So in a downtrend, I'm looking for sells, and we go from the high to the low. So the swing high to the swing low. Okay. And you're waiting for it to come back up to the 50, 61.8 area. Again, it's just not respecting it right there. I'll do one more, but if I don't get, a perfect example, I don't really care too much. So this one's interesting. This one's not going to give me a 50 either, I don't think, but, this is a good example because I wouldn't consider this little push upward a different swing high. I would actually take it from here to here, and it didn't quite get up to the 50, but that is how I would put it. And again, usually this 50 to 61.8 is what we would call a golden zone. So sometimes what I'll do as well is draw in. Hang on, I'm going to delete the other stuff because this is going to get annoying. Delete that guy. So sometimes what I'll do as well, I'll box in between the 50 and 61.8, create a zone, extend it. I'm going to try to end this soon, guys. I think I'm going on way too long here. Try to extend it and use this as a zone that eventually was respected, right? So that's the third indicator that I use most often in gold, and I don't use it a lot anymore, but it is a great indicator. I know the examples I showed didn't quite work out, but it's great. You'll see a lot of examples where it does, and you can catch really good entry here. So you won't always get like a perfect textbook entry, but you won't get as many entries, but you'll get a better textbook entry is what I was meaning to say. I'm going to leave you there. Hopefully, if you have any questions, let me know. And I am going to link those more detailed videos below so that this doesn't go on to like be an hour-long video. And yeah, I'll see you guys in tomorrow's video.